Welcome to Markets Now. I'm Michelle Rook with Vince Boddicker with Farmers Trading Company. Grains lower on Tuesday. Grains to the downside, but we did recover in the cattle market, mixed in the hogs. All right, so Vince, let's talk a little bit about the grain trade. First of all, it felt like another risk-off day, some pretty heavy selling. So did we get spillover from some of the outside market negativity? Because I know there was maybe some concerns about Israel and Iran and what's going on with the conflict there.
I think that's going to be in the news, and it's been there for quite some time if you paid attention, but it makes a difference. But I think more of it was the fact of coming into Monday, we didn't get follow through buying from Thursday's nice rally that we saw, especially in the corn and the wheat. You got those areas and failed. And when you failed on Monday and Tuesday didn't have a lot, I think it just got to the point where some people that may have bought on Thursday or some people that may have gotten out of short positions, maybe reestablishing those. Probably also some cash people that had to sell when they saw it wasn't just going to keep going and do that. So you're going to get some elevator hedging along with it.
So I mentioned the escalation of the Red Sea conflict there, and obviously that plus what's been going on with interest rate concerns again is starting to have an impact on the dollar. And so was that maybe another pressuring factor for the grains?
I'm sure they're looking at it. If you look at the dollar on a continuation chart, we did come right back to some previous high we had a few months ago and didn't break through it. If we break through it, it'll probably give you some more negative connotations. If not, it's probably not a big deal. But until this market drops well below 100, I don't think you're going to see a lot of great effects on the export side.
You know, weather also felt like it was a little bit of a factor with some rains in some areas. You got better wheat conditions than you did a year ago as well.
I'm sure it did. There has been talk the last few weeks of, hey, it's really dry. We're going to get planted early because it's dry. And we all know that can change in a hurry, and it feels like it might be doing that. So if you get rid of that risk, at least short term, you take those people out of the market. And you talk about the winter wheat ratings. They're probably the best ratings we've seen in 4 years coming into it on that initial one. So good for that. And they're getting more rains in those southern plains, and northern plains getting some. And that was in really good shape anyway going into last fall. So now we got to see, can we hold last week's lows? I think is key in the wheat and the corn. And really those February lows are the key ones when you look at corn and soybeans.
What about weather in South America? Because Brazil is getting a little bit of rain for that second crop corn, right?
They are. And you saw some private people decrease that corn crop a little bit this morning on Tuesday morning. I can't remember what the amount was, Michelle, but for the most part, the corn is really the only thing you got to worry about over there right now. The second crop, I think beans are done. Argentine corn and beans probably don't get a lot more effect from rains. So we'll just need to continue to watch. Do we stay wet in here for that second crop corn, or do we get hot and dry like it notoriously could here in another 2 or 3 weeks?
So the funds, we're starting a new quarter. Are they back re-entering and pushing the short side of this market as well?
It's a possibility. I think for the most part, we're used to seeing those funds come in and buy. And now when you're in a downtrend, it's not going to be that way. But that is possible. But I think it's more so the market adjusting to some new information that it got last Thursday. And if we're not going the direction we wanted to on the upside, let's go back to our old policy of sell until we get punished.
Yeah. And you hate to rehash the USDA reports, but now that we've had a little time to digest that and look at some of the numbers, there's still a lot more questions, I think, than there are answers.
I would agree. And, you know, as you and I discussed earlier, it would be nice if USDA is going to leave, I think it was 3.2 million acres out of the pre-report estimates that they were there. Tell us where you didn't put those in it. By looking at some of the states that they decreased that, you have to wonder if they did not count some second crop soybeans.
Oh, that's a good point. So looking at the closes today, did we do any technical damage in the grains, in particular soybeans, which actually had a pretty good rally early in the day and then kind of reversed?
In the beans, you could say you maybe did. You did take out last Thursday's low. I think the inability with beans, a nice rally early in the day to take out Monday's highs was a negative, and then you just kind of got there, and they went from 4 lower to 12 lower in a matter of minutes in here. So we see where they go, but could you pick another 20, 30 cents off beans yet? I think you could. Wheat market is still key of holding those February lows.
So, Vince, we had a pretty good recovery in the cattle market Tuesday after that wicked meltdown on Monday in response to the human case of HPAI. So, how much recovery do you think we can anticipate in that cattle market?
I think we should be able to get back to where we started the week, Michelle, and maybe even to midweek last week. Can you do a lot more than that? We could, but there's some psychological damage here. One has to keep in mind that weights continue to go up. Demand is very good and it stays good. Tuesday's box beef movement was great again. Picked up after a week or so, some lightness. So I think those are things are supportive, but I would not be surprised to see this cattle market continue to be choppy most of the week as we saw on Tuesday. Nothing more to build confidence and say when we get breaks, are the buyers going to be there, which they were on Tuesday.
Yeah, no doubt. And then you also have, cash trade, which is not falling apart by any means. And the futures are at a discount to that. That should be supportive too, shouldn't it?
It should be. And keep in mind that this is the time of the year in the Fed cattle where that cash can go premium to the futures. When you looked at some of the early sales on Tuesday morning on the cash side sale barns, they were holding steady-ish, maybe just a little bit lower than last week, but not a lot. Feeder cattle, when you looked at some private numbers that did their estimates on Monday's sales, they were well over $5 higher than last Friday was. So I think that's a feather in the cap that the cash is holding together. But is that realistic or not? I think only time is going to tell us.
Yeah. So what about this hog market? We had a bullish reaction to what was a bearish hogs and pigs report, but we went up and made new contract highs in the June and kind of pulled back. Do you see this market needing to take a correction, or are we just going to keep pushing forward?
I think you could get a little bit more of the upside, Michelle, but whether you talk cattle or hogs or grains, I really think over the next month or two, you're going to get in the trading range and go sideways to see how things develop. On overseas conflict, as you talked about earlier, along with demand. Hog market, I think, looked at that report that maybe wasn't as bearish as some thought it could have been. So that holds it together. But I don't look for a runaway here. Numbers will get tighter this summer, but how far we can push it will depend on that consumer demand. And like we've seen so far this year, some great export numbers.
Yeah, I was going to say, do you think demand is the reason that we've held this market together, or that we have seen, the funds kind of push this market?
The funds did some in there, but I think a lot of it is that fundamental demand. As we noted, exports are good. If we look at last week's cold storage report, whether it be pork or beef over a year ago, I think they were both 12% less in the freezer, which assures you that we're not backing things up. We're using it, whether it be domestically or export wise.
All right. Thanks for joining us, Vince Boddicker with Farmers Trading Company. That is Markets Now.